This week, we're talking all about what you should be doing when your mortgage is coming up for renewal. Welcome back, everybody. Thank you for tuning in. My name is Justin Little, and I am a local real estate agent here in Hamilton, Ontario that loves making educational videos about the market. Today, I had to call in Davis Carroll from Mission35. Davis, thank you for joining me.
Thanks for having me.
We wanted to talk about a topic that everybody seems to be concerned about. And again, I don't really see content about it. People like what to do when my mortgage renewal is coming up. I have people saying, Justin, 2025, I'm up for renewal. I don't know what's going to happen. I hope rates come down. So let's dive into some options for people, what they should be thinking about when it comes time to renew. So just break down that simple process of the renewal.
For sure. And it's no secret, rates obviously have gone up significantly. And not only does that affect people looking to get into the market now, but it affects people that were in the market before and just have unfortunate timing with the renewals coming up in this high interest rate environment, right? So a lot of people get their mortgage renewal in the mail, they see the rate, they see the payment, and they don't know what they do. And they panic and they simply pick the best rate that is being offered to them on the renewal. And we're here to tell you today that the best thing you can do is talk to a mortgage professional, understand your options, and see how we can kind of make that sticker shock of the higher interest rates a little bit easier on you.
Yeah, and one thing there you're saying is people just tend to go for the cheapest rate. Now, say I had a mortgage with Scotiabank, that's coming up for renewal. Is my best option to call Scotiabank? Or I'm sure they'll have somebody call me, right?
Yeah.
But is my best option to call them, or what would options look like at that point?
And that's a perfect example because Scotiabank, who is a massive mortgage broker lender, who of course has millions of different people with mortgages through Scotiabank, and when they offer the renewal, they're simply offering you the best rate that they can offer you, right? And that doesn't necessarily mean that's the best rate that we can get you. Mm-hmm. So the great analogy I like to use is when you have your cell phone plan that comes up for it's 2 years, right? And they offer you a new plan, and you say, well, that doesn't seem very good. I know that there's other providers out there with much better deals. And they say, well, unfortunately, that's for new clients and not for you, right? And that's a little frustrating to hear. It's the exact same thing with your mortgage. Scotiabank might offer you a certain rate, but when we shop it around, we can often save you 0.5%, 0.75% even on your interest rate, simply from switching from one lender to another at renewal.
So if I want to switch from Scotia to RBC, what would I be looking like? What would I be looking at there? Is there extra fees? Could I be susceptible to penalties? Things like that.
Yeah, and it's a good question because you don't want to be paying a penalty, of course, to get out of your mortgage early or anything like that. And the renewal date is the perfect time to reassess your mortgage, as there's no penalty to get out of your mortgage at your renewal date. So that's a great time to shop it around. Another thing we're looking at for people is re-amortizing. So say you bought 5 years ago, you had a 25-year amortization, you're now down to 20 years. A simple method we could look at is re-amortizing your mortgage back to 25 or even 30 years to help with those monthly payments. So even with a similar rate, by restretching your mortgage, that'll certainly help with some of that sticker shock rate-wise.
If you do the renewal with, say, the different bank you want to move and stuff like that, at any point during the renewal process, even if you stay with yours or move, does the stress test come into play?
So certain times there aren't the stress test that comes into play. So when you do a switch, and if you purchased with 5 or 10% down payment, for example, 5 years ago, they just came out with a new rule where you get to qualify at what today's rate is. Now, you can't re-amortize in that situation, but if you simply want to continue on with the life you have left in your mortgage, you don't want to add money to the mortgage or anything like that, and you simply want to continue paying with the loan amount that you owe, you can qualify for a mortgage at just what the new rate will be, which is a big difference.
Yeah, for sure. And then say you're somebody that maybe only put 5% down, your renewal's coming up, you don't have a ton of equity paid out. I mean, is there always going to be a solution for somebody, or are we unfortunately going to be faced with a scenario where some people might have to sell?
Right, and that's a really good point, right? So if the rates have gone up so much and you simply can't afford it, and that's the reality, and you need to make a move, maybe you need to sell in order to kind of get yourself in a better monthly financial position, I think it's best to know that as well in advance as you can, right? So reach out to us. let's have a conversation about when your renewal is, what your rate's at, what the payments are going to look like roughly. And if you do need to make a big decision like selling or refinancing and re-extending your amortization, I think it's always better to know, as well in advance as you can, so that you're not panicking last minute and are forced to make a decision you might not want to make.
So how far in advance do you think is a good time to start thinking about this stuff?
Yeah, I mean, any time really is a good, we have conversations, no matter if a client is ready or not, or if they go with us or not, right? So anytime's a good time to reach out and have a conversation. But if your mortgage is up for renewal, 4-6 months from now, I think that's a great place to start. And we're able to hold rates for as long as 120 days, so 4 months. So yeah, but like I said, any time you want to reach out and have a conversation, I think is the right place to start.
And by holding, you're talking about if, say it's a good rate and rates go up, you're holding. But people aren't necessarily locked in at whatever rate you quote them, right? If it does go down, then you can get them still a cheaper rate.
Exactly.
Right?
You're protected against an increase, but they will honor the lower rates if they do decrease before your closing.
Amazing.
Yeah, I think that's, those are the basics. Ultimately, you want to have a conversation. Everybody's situation financially is different. So, getting tailored advice to your particular situation is, of course, what we're here to do. But yeah, anytime anybody has any questions, and that's the time to reach out, I think.
Yeah, perfect. We're going to link Davis's info in this video below in the description. If you can get a hold of him, like he said, speaking to a broker has its advantages over just waiting for your bank to call or calling your bank, because you might not necessarily be getting the best rate. So reach out to somebody like Davis. You can also reach out to me directly if you want to talk about that, options on your end in terms of the real estate aspect of it. So anyways, thanks again so much for tuning in this week. Davis, thank you so much for joining me.
My pleasure.
I appreciate it. We'll talk to you all again next week. Take care.